I have a captive audience. I can be as boring as I want. You guys aren't going to leave. I'm going to start off here with a few things that might impact the real estate market. So I've got a few numbers here, and the big thing here is the top line is the 30-year mortgage rate. Right now, I do it quarterly because it kind of evens some stuff out. Right now, the 30-year mortgage is about 6.65%. The 30-year mortgage and the 10-year Treasury follow each other really closely, as you can see with the orange line. But every once in a while, they get a little out of sync, and there's a bigger gap or a smaller gap between those two. And for the 50 plus years, the average is 1.78%. So today, the 10-year Treasury was 4.55. With that typical 1.8% spread, the interest rate should be about 6.3%. But as you guys heard me say, they're really at about 6.6%. The investors that are buying the 30-year Treasury mortgages want a little bit extra right now for some reason. We got really close and we got almost back down to the average, but that's really what drives mortgage rates is that 10-year Treasury. The lower the 10-year Treasury and the lower that gap is, the lower interest rates. And what I've found in watching the interest rates for about 10 years now, and especially the last probably 3 or 4 years since they got super low. Anybody remember 2021 and you could get an interest rate of 3 and 3.5%? A lot of people got those. They're locked into those houses now. What I found is when the interest rate's closer to 6%, more of those people are willing to move up. They're willing to abandon that low 3.5% interest rate because it makes sense at that time. But at 6.5 and 6 2/3, which it is today, they're not quite willing to do that. So that's why I watch this on a pretty regular basis. The 10-year Treasury I watch the news to figure out what the 10-year Treasury is going to do, because the average homeowner owns their house about 10 years. That's why the 10-year Treasury and the 30-year mortgage go hand in hand, because the investors can get their money back in about this exact same time period. And how many of you bought a house and the next day, all of a sudden, somebody else owns your mortgage? Happens all the time, right? So that's what we're watching here is the 10-year Treasury. The other thing we're watching is jobs, because if people have jobs, and this is Kansas City, this is thousands, so that's 1.1 million jobs in Kansas City. It's been pretty flat since August of last year, August of last year. We're not creating a whole lot of jobs in Kansas City, but jobs is just half of that. When you start to look at this, we saw that big drop right there. That was COVID. We just haven't seen a big increase in jobs in our entire metro area. We need to get more jobs, economic development. There is some short-term jobs right now because of this thing called the World Cup. There are people that have jobs, but they're only temporary for 6 months. So this is our market today. This is what we saw. As of this morning, the average sales price, or the median sales price for June was $345,000. That's a change of $10,000 from May. It's a change of 5.3%, almost $18,000 from June of last year, just through today. We look at last month, and today's the 8th, right? 9th. I'm a day off. I'm a day behind. Why am I here already? We'll see that number kind of fluctuate, but when we look at last month, we're at 4.69% over April of the same year, and 4.72% of May this year. Why do I look at both? I'll explain that to you in a little bit. And then year to date, our median sales price is $320,000. Through June 9th of last year, it was $300,000. So if we continued that trend the entire year, we're going to end up with almost 7% appreciation. Who thinks that's good? Anybody? That's good, right? If you own a house, who thinks that's kind of a bad thing? This is kind of that. It's not bad or good. It's not in that range. If we saw 10, 12%, prices are going up too much. The wages aren't going up enough to keep up with the price increases. If we saw 2% or 1% or negative, that's not good either, because the market's kind of going backwards. And we'll hear here probably towards the end of June, middle of July, that prices are at their highest. That's actually a good thing. Because if they don't say that in June and July, that means our market's not a healthy market. So when we look at this is a lot of numbers. Every square is a month back to 1997, and every number is a percentage change from the same month the previous year. So the last time we had a negative month over month, 2023. We had 2 months in a row. So since 2012, we've never had a month where we've gone backwards outside of those 2 months and then one in December. So for 14 years straight, that's over 150 months, we've had 3 negative months in appreciation. And this is resale homes only. I take the new homes out. How many of you guys build new homes? Didn't think so. That's why I only deal with resale stuff when I'm talking about markets. We have a very robust market in Kansas City. And we'll see national stats, and you'll hear national stats, and you'll hear people talk about how many people are visiting homes on Zillow. Those numbers don't matter because what matters most is our market right here. So we've got a very healthy market. Zillow gets 150 million unique visitors every month. We sell about 5 million houses a year. The numbers just don't add up to the people looking. People just like to look at houses. How many of you guys have had an open house and just a bunch of people walk through just because they want to look at the house, right? The numbers that matter are local and what we can do with those. But you can also manipulate numbers. We're in an election year, and you're going to hear people talk about the housing market because housing drives our economy, right? And so you can take this number and you can look back up the chart and you go, okay, year over year, we're doing great. If I showed you the same chart right here, there's a lot of red. Every single underlying number is exactly the same, dollar-wise. If it's 320,000 right here, it's 320,000 right here. What this one does is it goes month over month. So it takes June through today, over May, over April. And we see a sudden decline in July. And so that's why I said in a healthy market, historically, somebody goes, oh my gosh, prices are dropping in July. It happens almost every year in July. It's not a big deal. As long as it's not 20%. I mean, the biggest one I see on there is 5% and 9% in 2010. Anybody want to live back through 2010? Didn't think so.
Well, as a buyer.
Yes. As a buyer, yes. Who wants to time travel to 2010, buy, and now have those houses done?
Yeah.
So when I said the prices are, when you're going to hear that, hey, prices are the highest they've ever been in June, this is that chart that says that should happen every year. And then they should slowly drift back a little bit through January the next year, and the cycle repeats itself.
Is it nationwide?
This is Kansas City. That happens nationwide too, though. But this is our MLS, this is our 50 counties that are local. We don't really care what happens in California. It doesn't matter to us, right? So I posted on the Facebook page and they said, hey, what do you think of this national number? I don't care. What matters is what's happening in my neighborhood and my zip codes. So you might hear some politicians that talk about this chart. Go backwards. This chart and go, oh my gosh, the market's doing amazing. You're gonna have some politicians that get to August and go, oh my gosh, the market's crashing. It's down 4% over last month. Exact same numbers. It's how they present them. So keep that in mind when you hear market numbers is who's presenting it and what's their agenda for that particular number. Because if it's month over month, yeah, that's pretty typical for our market. If it's year over year, yeah, that's pretty typical for our market for 14 years. So a lot of people ask me, have we recovered from the real estate crash? And before that's February 2018, we were averaging about 34,000 sales a year. This is every one of these bars is 12 months worth of sales. So you saw it was pretty steady, and then all of a sudden we hit right about there. That's August of 2020. Yeah, August of 2020. And they started to go up. We started to see interest rates go down. We started to see these go up. Our low was 29,000. So we went from 34,000 to 29,000. We also jumped up from 34 to 39,000. A swing of about 10,000 houses. As of, I did May on here because I didn't want to have June because we've only sold 8 days worth of houses. We're at 31,744. We're down 100 from the previous 12 months, which it happens every once in a while, but you're seeing that we're slowly growing. We're not back to the 34,000, but we're not that far away either. So it's a healthy growth. If we went from 29,000 to 34,000 really quickly, we're going to be overpaying for houses because the supply just can't keep up with that. And we look at this and we say, okay, this is great. We've got about 2,000 more houses per year. It doesn't feel like a lot, but that's slow and steady growth. The demand is still there, but it's not too much that we're having 12, 14% increases in appreciation. So I started this, and if we took the median sales price in 1998 for resale properties, it'd be $100,500. Again, who wants to go back and buy a bunch of houses, right? As of today, it's 320, as I talked about earlier. If you just have 4% appreciation, which is pretty standard, pretty good, you see the orange line. So we were pretty good following that line through 2006, 2007, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, we were below that line. Slowly catching up, and then 21 and 22 hit, and we're above the line. Last year, we were at 310,000. If we were at 4% for historical for 20 plus years, it would have been 289,000. So we're a little above that line right now. This year, if we were at end of the year, right now it would be 301,000. We're probably going to end up somewhere around this 320,000. I don't see a lot more growth above this because, as I talked about, the prices are going to go down just a little bit. But a majority of the homes are sold before June 30th. We sell probably 2/3 of the houses between January 1st and July 31st. August, September, October, November, December sell houses. They're just not the same pace as we see in the spring. So we're a little above where we should be, which tells me that at some point there's probably going to be a little bit of a pullback back to that 4% line. And then I like to do some stuff where we compare existing homes. Existing homes is going to be condos, townhouses, single-family residence, everything. And the top lines are median for that. You notice that the median's a little bit higher because we've included some higher priced things like some $5 million condos that are for sale downtown or sold. So a little bit different numbers here, but the bottom line is that median price change. Again, all year we've never seen any lower than December with 1.6% in June. So we see those little trends, but May was 4.5%. Again, that's steady rate of return. And to get to those closings, we have to start with listings, right? So the very top bar here shows the change in listings. And we've been pretty steady, and then we hit January and February. Year started out fantastic. Rates were low. They were 5.99% for, I think, 2 days. Anybody get their refinance in those 2 days? And then interest rates and the 10-year Treasury started rising. And our listings started to not go negative until May. Not as many listings are happening right now. We had a ton of closings or contracts written in January and February because we had a ton of new listings. The buyers are there when the right opportunity is there. So as investors, if you're looking for the right opportunity, find out where the prices are people are buying, where there's multiple offers, and try and find things in that opportunity. And then up through May, we had more closings. Great closings in February because we had a ton of contracts written in January, right? Same thing for March. We didn't have nearly as many contracts written in March or April. Now we got to May and everything's under contract for about 6 weeks. So what we see happen in March for the contracts written usually shows up at the end of April and into May. And so we're probably not going to have a great June either just because we didn't have a ton of contracts written and we didn't have a ton of listings in May. June and July are looking like they're going to be a little bit negative. So, and then I like to point this one out that the blue bars are days on market. Days on market are seasonal, just like prices and other stuff. And then the orange one is the percent of homes that sell at or above list price, or the percentage of list price to sales price. We saw a huge spike in list price to sales price in 2021 that almost all the homes were selling for 100 over list price on average, 102%. We've started to get back to a more normal market, and I say normal-ish. I think this is our new normal that in the peak months, 2/3 of the houses are going to sell at or above list price, whereas a third won't. So if you're looking for the deals, you look for these bottom parts that are higher days on market, lower list to sales price. There's a correlation between the calendar and the days on market and the price. And then where are people buying? So this is the closings by price point. Every bar is 25,000. If you're looking for the most opportunities, 175 to 450. That's where the most houses are selling. when you get down here, and these are even 100,000 increments, that's why there's a jump here. If you're trying to flip a $2 million house, only 63 of them have sold this year so far. Just keep that in mind that as you're doing this, you want to make sure you have those things. And this one looks a little crazy, right? The orange lines are the percentage of homes that sold at or above list price. The blue lines are the ones that sold above list price. And for years, from 1997 through really 2017, a majority of the houses sold below list price. You had your pick of properties. So when we talk about months of inventory and how's the market, there's two ways of doing it. It's like months of inventory, how many houses sold versus how many were available. This tells that same story. As our inventory started to shrink, we started to see more homes sell at or above list price. Then we got to COVID and it went crazy. And since then, we've slowly dropped back down. But I think this year and last year are our new normal. In the peak months, 2/3 of the homes are going to sell above list price. Again, when you're looking for those deals, you're looking for where the orange is the highest and the blue is the lowest. And that's always December, January, February. Even back here, the lows were always December, January, February. So as investors, we're actually entering a great time to start to find properties. And if you buy them in January and February and you flip them and you have them on the market in March, and it takes 6 to 8 weeks to close, where are they closing? June, with the highest price point. So that's it. That's what I have for you guys today. If you would like to get in contact with me, I do have a website, housecrafts.com/MAREI. You can scan the QR code and you can, it'll put your contact right in. But any questions on the market stats, anything?
I know this only Kansas, how about the New York?
New York?
When is the best time? Because my daughter wants to buy.
When's the best time to buy? The best time to get, if you didn't already buy, the best time's more towards November, December. Just because that's when people want to get it off their books by the end of the year, especially if you can go under contract in November and close by December 31st. That's the best times to do it. So a few announcements before we get started. Thank you to our sponsors. You may have heard me talking to a few of them out there. DeMayo Enterprises, the Cabinet King of Kansas City, Mark. We've got Olson Foundation, Cleaning Maids, GM Real Estate Capital, Fix and Flip Funding with Brendon, and Ken does all sorts of things. So if they're still here when we leave, say hi to them and make sure to say hi to them the next time. And if you don't remember them, you can always go to marei.org/business-directory and see all of our vendor partners. I think there's over 65 partners on that list for you guys. So whatever you need, if you need money, if you need plumbers, if you need foundation people, if you need roofers, anything that you need as you start your investing career. How many new investors in here that are coming to learn stuff? We got at least a few over here. This is a great resource for you because these people have already been vetted by the people that are investing here in this room already. If you want to know what's coming up, marei.org/full calendar. On this Saturday, June 13th, why real estate investors build wealth too slowly and how to do it better. So this is an online course. You can register at marei.org/calendar. Fantastic courses. A lot of them have discounts if you are a MAREI member. So guess, if you're not a MAREI member, you should join because you get discounts to all these different things. In 2 weeks after that, June 27th, we've got 1031 exchanges. Deferred taxes, reinvest 100%. How many of you have ever done a 1031? We got lots of hands in here. Fantastic way to not have to pay Uncle Sam money today. It's not that you don't ever have to pay them, but there are ways that you never have to pay them if you do it right? So learn about 1031 exchanges. JM Financial back there does a lot of those as well. And then my favorite MAREI meeting is next month. It's our trade show. This room isn't going to be full of any chairs. It's going to be full of tables with, what's it say, 35 plus business sponsors. 35 plus people that you can come talk to and ask about how they do business. All those people I mentioned that are the 60 plus vendors, more than half of them are going to be in this room for you to be able to come and talk with them. And if you're not a member, you should join tonight. How many people have been members for 10 plus years? See all those hands? there's value here because we keep coming back. And raise those hands again. Look around if you're new. Find these people to talk to after the meeting. How did you get started? What did you do? Give me some tips. If you could come back, if you could go back and start your real estate career over, what do you wish you knew then that you know now? And that's it. So I'm done. How did I do on time? I didn't even look. Hey, they all make fun of me because I usually talk for like 20, like they give me like 20 minutes and I talk for 40 minutes. But I did good tonight. And so thank you guys. I hope you enjoyed that. Are you ready to come speak? You got the clicker. Hold on. Hello. All right.
Hi, my name's Brendon, and I'm going to be your speaker tonight. Hold on a second. Was that a little boring? You guys think that was boring? Let me try that one more time. Crank it up a little. Crank it up a little bit. Have fun tonight. Go. Get started. Stacy, come on. You guys can come on in. Just because we're going to talk about boring tonight does not mean you can't have a little fun every once in a while, right? Yeah. Okay. Hey, little side note, little game of name that tune. Does anybody know what song that is? Enter Sandman by Metallica. Okay. Cool story about that song is a while back, my son is a pretty good musician, started teaching me a few things on the drum set. So with his help and a ton of YouTube videos, I've been teaching myself how to play the drums for the last year and a half. And that's actually one of the songs I can play. So I was going to bring the whole drum kit in here and play it for you guys, but that got way too complicated, so we just did the entrance instead. So I bring that up to tell you that whether it's a musical instrument like the drums or anything else, you're never too old to learn something new. Right. And that includes real estate. Right. So if you're here tonight and you just walked in the door because you saw a sign or you heard about it on Facebook or you're just checking it out or somebody drug you here, hey, you're in the right spot tonight, okay? And if you're here and you're like, I already know everything about real estate, then I'm telling you, you're still in the right place tonight because I'm not the only one speaking tonight. You can't learn everything from me, so I'm going to bring up some experts and we're going to interview them as well. And if that doesn't solve all the problems, then if you stick around long enough, I know Kim said everybody that came in the door was going to get a book, but actually if you stick around and then when you leave, you get a book. So some of you might have already got one, but we're going to hand out a gift here later on in the evening. So, my name's Brendon, again. Other than my exciting entrance, I will be known as the most boring real estate investor you've ever met. Okay? And that's what we're going to talk about tonight, is what is boring and why it's a good thing. The best way I can explain it is these two pictures right here, two cars. Okay? We got a sports car and a minivan. Let's take it one at a time. Let's talk about that sports car for a minute and ask yourself what's true about that sports car. Well, we can tell ourselves things like it's fancy, it's cool, probably fast, fun to drive, right? People are jealous of you. You drive down the street and everybody kind of turns their head. You get home, you pull up in the driveway and all your neighbors know you're home. Okay? What else is true about that car? It's expensive. You worry about it all the time. You park way in the back of the parking lot so it doesn't scratch. You run down in the middle of the night to make sure it's still in the garage. Right? Okay? It's hard to replace, so like if you wreck it, you know, it's hard to go find another one. It's hard to sell it because you got to find a very specific buyer. Right? And yeah, who else likes red, fast sports cars? Police officers. You get pulled over all the time, right? The biggest problem with that sports car is if you have a family or you're 6'2" like I am, you don't fit in it. Okay? What about the minivan? Let's go over that one. What do we say about it? It's plain, kind of clunky, probably slow, not super fun to drive. It might even be what you call boring, right? But what else is true? It's affordable. Okay? You don't worry about it because there's a whole bunch of them out there. If I need a new one, I just go get one. They're all over the place. And if I need to sell it, I throw it on Facebook Marketplace and it's gone tomorrow because everybody needs one. You know who else doesn't care about gray minivans? Police. They think you're a soccer mom driving down the street. And what police officer wants to pull over a soccer mom, right? You know the best thing about that is if you have a family, it gets the job done. Okay? You might be like, well, Brendon, what are we talking about here? We're talking about cars. Well, I invest in long-term buy and hold rentals. I call them boring rentals. Because there's a lot of things you can do in real estate that are the fancy sports car. They make money, and they make money fast. But if you want to create income and build wealth, it's the gray minivan. Okay? That's how it works. Another way to explain this is why it works. Okay? Another picture for you. It's a Monopoly board. Who likes Monopoly? It's kind of a boring game, but yeah, we play it quite a bit. So there's two ways to play Monopoly. Let's go over it real quick. First way, you grab your little piece. You can get like the top hat. You can get, what, the thimble. It's kind of weird pieces, right? But you get your piece. Here comes your turn. You roll the dice. You move your piece on the board and you land on a property. First option is you don't buy it. Okay? Comes your turn again. You roll the dice. You move to another property. You don't buy it. Every time you get to one of four corners, they give you $200. Okay? But the other way to play, and the rest of the time, well, hold on. You go around the board. What do you do the rest of the time? You pay rent. You pay taxes. You try to stay out of jail, right? Sometimes you get lucky and you get like that chance card where you win a beauty pageant. You get $10. I always like that one. Okay? What's the other way to play? Your turn comes. You roll the dice. You land on a property. You buy it. Your turn comes around again. You roll the dice. You buy that one. You still get $200 when you pass go. And then you get to choose, am I going to take this money and invest it in more property? Or am I, and eventually you can improve the properties you already own. I tried this with my kids one time. I told them, I said, here, you guys buy the properties, I'm going to play and I'm not going to buy anything. Let's see what happens. So in the beginning, I was crushing it because I was flying around the board and I was never spending what I was making. I was getting more money. My pile of money was just growing like this. But the longer we played, the more and more I couldn't make it around the board, but I was spending more than I was getting. So in the end, who won the game? Well, my kids did because they always say they win. But they won because they have all the assets. The assets are who win the game, right? And why does it work like that? Okay? Because assets make money more than one way. There's a lot of ways to go make money in real estate. I've done a lot of them, and that's important. You got to have capital. You got to be able to make some money, right? But if you want to build wealth, you can hold the assets. You can make money four different ways. Okay, let's go through them real quick. Cash flow is the most obvious. That's the income minus your expenses every month. The difference is cash flow. Most people get into rental properties for cash flow. That's why I got into them, because I wanted them to kick off that cash flow every month. Second is loan pay down. When you have a mortgage payment, there's a little portion called the principal. Okay, so every month you take your rent that you get and you go make a mortgage payment with it. And you pay down the principal. It's like a little hidden savings account. I used to hate mortgage payments. Now I love them because every time I make a mortgage payment, I build more wealth. Okay? Third is depreciation. That's just a fancy word for I get to keep more of my money. Okay, now who doesn't want to keep more of their own money? Okay? Boring rentals are a great way to tax shelter your income. And fourth is appreciation. That's that hidden gem. That's where you buy a property without even realizing it. That's the money you make while you sleep. Without even realizing it, it goes up in value. And so down the road you go, oh, sometimes you don't even know what it's worth. You bought it here and now it's worth here. The difference is appreciation. That's that equity growth. Okay? So I've been up here a whopping 5 minutes. I've probably already convinced you that rental properties are the best thing out there, right? So if I've already got you on board, you might be saying, well, how do I do this? Or how do I stay boring? Brendon, I'm going to do that too. Okay, well, I have 5 ways to stay boring tonight, and I'm going to fly. So if you're taking notes, you got to write fast, okay? Because I got a lot to get through. So 5 ways to stay boring. First is stay focused, okay? There's a lot of things to do in real estate. You're probably going to hear something new next month or the month after. You're going to hear something next week. You might hear something before the night ends. But once you determine what you want to do, stay focused. I call this stop chasing squirrels. So if you're a dog lover like me, you know what happens when you take your dog on a walk. You're walking and it sees the squirrels, it's on the end of its leash. Yanking on its leash to try to go get that squirrel until it sees a squirrel on the other side of the street, and then it wants to go chase that squirrel. And you and I both know that if we let our dog off that leash, it might chase this squirrel, it might chase that one, but it's not going to catch either one of them. Okay? So I want everybody in here to practice MoFOMO. All right? Break this down with me. FOMO is the fear of missing out. I'm going to give you permission tonight to put a mo in front of it. Miss out on the fear of missing out. You can still live your best life and miss out sometimes. It's okay. I'm going to give you that permission. And you do that by learning how to say no. You might have to say no to deals that don't make sense for you. You might have to say no to commitments outside of real estate. Like when your buddies are like, hey, let's go out and party tonight. You're like, nope, I got to go to a MAREI meeting, right? You got to say no sometimes. You might have to say no to opportunities. Why do I put opportunities in quotes? Because not every opportunity is an opportunity for you. It might be an opportunity for that other person, but it might not be an opportunity for you. I want everybody in here to be great at one or two things instead of average at a lot of things, okay? Second is create systems. This is property management 101. Aaron Ford, who's going to be up here in a minute, taught me this a while back. He said, it is not about what you buy. It's about how you operate what you buy. And you do that by getting good at management, okay? So first thing, use checklists. Checklists for everything. Because if you think you won't forget something, you will. So make a checklist. Make templates for everything. That's like text messages, emails. Why recreate it? If it's happened to you once, it's going to happen again. So just keep a template of it and then copy and paste it the next time that issue comes up. Stay organized. There's two ways to do this. Eric Grandeman calls one of the ways the property dashboard. That's a spreadsheet with everything about your portfolio on it. So it's the rents, it's the expenses, it's the value of the building, it's how much equity is in it, it's who holds the note, what are the terms of the note, when's the mortgage payment due, all in one place. If I called you tonight and asked you a question, you should be able to answer me in 10 seconds. You should know those numbers. Second is bookkeeping. Don't put this off. Don't wait till April when it's a mess. How many accountants just thanked me right there? Right? Okay? Yeah, there's one right there. Right there's your accountant. So, how do you know if you're making money if you don't know if you're making any money? Just because there's money in your bank account doesn't mean you're making money. You need to know the numbers. You got to keep up with your bookkeeping. 3 is find a good software program. We live in 2026. There's an app or a software program that will help you stay organized, that will help you keep track of things, okay? I don't care if you have 1 or 2 properties. Act like you're a big business before you are one. Go get something. There's something out there for you. Use official forms. That means you can text your tenant back and forth. It's okay to communicate with them. Sometimes that's the only way they'll communicate with you. But once you come to an agreement, get it in writing. Get it on some kind of form and send it to them. Make it official. And lastly, and maybe most importantly, is get an easy-to-explain lease. You will never get a perfect lease. About the time you think it's perfect, you're going to go over to your tenant's house, and they're going to be changing the oil of their motorcycle in the living room. Okay? It's going to happen. There's no perfect. You can't get everything in there. So get a well-written lease, but more importantly, make it so that you can explain it. You should almost have it memorized. Second, they need to be able to understand it. If they can't understand it, how do you expect them to live by it? And third, you both need to be able to follow it. Okay? You have to be able to follow your lease, and they need to be able to follow your lease. So make it easy. Okay? Third is invest in what you know. I call this buying one at a time. That's how I did it. Buy one, get it rehabbed, rent it, and then when you're ready, go buy another one. Okay? Just stack them together. Invest in what you know. Buy one at a time. Buy things you understand. Let me go back to that real quick. I was going to go back to my Monopoly example. Like if you think about Monopoly, it's a great example. When you land on a property, the rules do not allow you to buy the whole set of properties. You get to buy one. And then if you land on another property down the road, then you can buy that one. Okay? That's how the world works. Buy one at a time. Buy things you understand. When I first started, I only knew 2 things. I knew that if I rented it for more than I had expense every month, that was a good thing, right? That was cash flow. I also knew, because I owned my own home at the time, that if I bought something, that eventually it would be worth more money. I didn't know anything else except those 2 things. But if you focus on it, it shows the power of staying focused on what you do know. And if you don't understand, then that's why I don't invest in anything that I don't understand well, okay? Now I'll go on to buying your own backyard. Does that mean buy your neighbor's house? Not necessarily, but you can. But it means buy in areas that you know well. Listen, you will know no place better than where you live right now. You know the school districts, you know the crime rate, you know the values of the buildings, you know the stoplight down the road only works half the time. You know that place better than anywhere, so why not buy there first? Okay? Next is keep it simple. I have a really simple slide here. Let's read this together. More stuff equals more complicated. Complicated equals more mistakes. More mistakes equals more pulling your hair out stress. Just like this lady, right? So when you're getting into boring rentals, I want you to ask a few questions. Ask yourself things like this. Do you need 20 LLCs or some other kind of complicated entity structure? You know, the LLC that's held by an LLC that's held by an LLC in some other state somewhere? Now, I'm not going to stand up here and say you don't. I'm not an attorney, so maybe you do. But I see so many entities that are so complicated that they're not run right. And I think it's more risky to have a complicated entity structure that's not run right or managed well than to have a simple structure that's ran really well. Okay, so ask yourself some questions. Ask yourself things like, am I overdoing my rehabs? Do you need imported tile from Italy in your rental properties? Probably not. Okay? Just make them nice and clean. Fix the mechanical so you don't have repairs all over the place, right? Ask yourself questions like this. Does it fit the neighborhood? How long will it take to get my money back? And do prospective tenants even want to pay for this? Because if you rehab fancy, you have to charge fancy. And yes, tenants want to live in fancy, but they don't want to pay for fancy. And you're probably going to be redoing it in 5 to 10 years anyways. So if you do it fancy, then you got to redo it fancy. Okay? Some people might disagree with me, but I think gray paint and brushed nickel still work. I got about a dozen properties right now that are painted agreeable gray, inside and out. And they work fantastic. Okay? So just get them clean and get them rented. Third, ask yourself, am I using debt wisely? Or do I have too much debt? Or is it too risky? Do I need a wrap that wraps a double wrap? Or some other kind of TikTok guru coming out telling you this is the most important way to get debt on your properties? What about doing something conventional like an owner finance deal or something simple? Or what about saving a down payment? Okay, the first one's the hardest one. Once you get one, then your down payments get stacked up quicker. Okay, and there's other things you can do, but make sure that you're using debt wisely. And lastly, hold long term. This is the most downer slide of the evening. Okay. If you came here because you said, well, Brendon's going to give you the get-rich-quick scheme, I don't have it for you. Okay? Wealth is built slowly. Now, it doesn't take forever, but it takes a little bit of time. It's like this tree. It's the best picture I can find. Okay? You stick a tree in the ground, and it's like a stick, and you're like, it's not even growing, it's dead. What you don't see is the roots underneath growing. Okay? And they're spreading out. And then the tree starts to grow, and it gets taller, and it gets leaves on it. And then what happens? The end picture, it starts producing fruit. The cool thing is, it doesn't produce fruit once, it produces fruit again, and again, and again. And the even better thing is you don't have to have one tree. You can have one tree now, you can have one tree next year, you can have 2 trees the year after that. Okay? Lasting wealth is built long term. You can make money fast, but you can lose it fast. But wealth is built long term. Second is, by holding long term, it helps you experience financial peace. Yes, that's typically a number. I think it's also a feeling. It's also that feeling of I wake up in the morning and no matter what happens today, I'm going to be okay. Okay? That's peace. Holding long term also helps you leave a legacy. If you want to create generational wealth or you want to teach the next generation, there's no way better to do it than boring rentals, in my opinion. Okay? Lastly, some of you may have got a book or know that I wrote a book. It's called Boring Rentals. Build wealth, experience freedom, and find purpose. One rental property at a time. Okay? If you can see, even in the back, you can tell it's not very thick. It's not very sophisticated because I wrote a book that I would want to read. Okay? But I cover a ton in here. I cover the 3 seasons of investing, the beginning stage where you're just trying to determine why am I even doing this? Like, what's my why? I talk about finding deals, finding money, and ultimately like how to hang in there because at some time it's going to get tough. You know, you're going to have a contractor go over and paint the house the wrong color. You're going to have a tenant not pay their rent on time. And that's where you're going to want to throw in the towel and give up. So you have to hang in there at the beginning. Middle stage is the second stage. That's growth mode. That's where we're like building that momentum I just talked about. Because the first one's the hardest. And then we get into that momentum stage and it continues to climb. I also talk about property management and I talk about how to use debt. Because if you're going to grow your wealth, you might have to use some debt. Okay? Third way is the end. That's where you're determining like how much is enough. Because there's going to be a point where you're like, am I at that point? Do I have enough yet? And then I talk about estate planning. I also talk about how to leave a legacy beyond money. Okay. I also have some other quotes and things from some other experienced investors in here. A lot of them are sitting in this room, so they probably should have wrote the book. But I got their knowledge in here as well. I also share my story in here. I grew up in Western Kansas. I knew 2 things. I knew how to farm and I knew how to play football. And 13 years ago, I figured out a little bit about boring rentals, and I was able to learn all that, which means anybody else can do it too. Okay. Best thing about this book is I told them all to hold Alan out there because I wanted to announce it. I wanted everybody in here to stick around a little bit and hear our panel. But please take one home with you tonight. Kim has purchased a book for everyone in here, or at least every couple. So if you came with a partner, please take a copy home. They're going to hand them out the front, or I have some up front. I think we might even set up a signing section because if you want, I will sign a copy for you. So that's all I have for tonight. We're going to transition into our panel. So I'm going to ask our panelists to come up here. Kyle, or while Roland's getting them set up, is there any questions So you want to take a couple questions? Does anybody have a question or a comment real quick before we get going here?
What is for the board?
I call it boring because it takes time and not a lot of people think about it. Okay, it's not super exciting. You ever heard of a rental property owner on HGTV?
No.
No, it's all everything else, right? It's all the exciting stuff. Any other ones? We about ready here.
Any questions, anybody? How many rental properties do you own right now?
I own 17. Speaking of buying your own backyard, I live in Olathe. So my border is Johnson County. That has worked well for me. It's what I know. Like I said, I came from Western Kansas, so I hit the state line and I kind of run into a brick wall right there. So, 17 properties right now.
Single family?
A whole mixture. So I have some single families, some full duplexes, and then some condos as well. So I think that they all have their pluses and minuses. So single families are great for the appreciation and stuff like that. Condos are good because they're less maintenance, but you got some HOA fees and things like that. So I like to have a mixture. I think a little mixture of where they're located and a little mixture of asset class is really important.
One more question for you. What's your favorite horror story of like a house you didn't buy that you thought about it that had like the worst thing in it that you would have sunk money into?
Worst thing I would have sunk money to?
Like a house you avoided a disaster.
I don't think we've ever avoided anything. Here's the thing. There's always a right price. Not my wife might speak differently on that. I don't think there's a house I would avoid for the right price. You can do anything.
Check. He only buys in the rich neighborhoods, so.
Everybody says that. Okay. Little tidbit of information. We're sitting in Overland Park right now. That does not always make it easy. Okay, so I'll be quite honest with you. But yes, the real estate values and everything are really great around here. So thank you for that, Aaron. All right, you guys ready? You have to pick up those mics. All right, you guys ready for this?
Yes.
Okay. We're gonna start with the easy question. Who are you? So we're gonna go down the line, let you guys introduce yourself, maybe share a little bit about what you do, and then if you have like, why did you get into this, or any type of what motivated you to start. We'll start on the end. Jeff, you wanna go first?
Yeah, sure. All right,
there you go.
Yeah, so technically I'm Brendon's neighbor, so I'm gonna play Enter Sandman every time he's out mowing. I really enjoy that.
Yeah, it's already on there.
You're the boring, huh?
So my name is Jeff McDaniel. I work for Barrett Financial. I'm a mortgage broker by trade. I've been lending on real estate since late 2005. So that's kind of where I dipped my toe into the real estate business. And then in 2010, prior to that, me and a buddy started talking about going into business together, buying rental houses, renting them out, stuff like that. The crash happened in 2008, obviously. We were waiting for a while for that to pan out. In 2010, we decided to start pulling the trigger. So our buying time was just kind of worked out there. Started a company, paid the first property with cash, then tried to buy a second property, and met a banker who was able to finance the full rehab and everything to 80% of the post-rehab price.
Yep.
So that enabled us to scale pretty quickly. We built that business up to 45 properties, and then me and my wife own some Johnson County houses as well. So that's kind of most of it. I have a property management company too that we kind of manage a majority of those properties with too.
Awesome.
Aaron? Yeah, my name's Aaron Ford. I'm really just an ex-construction worker, to be honest. So my whole family full of construction workers. I remember doing some jobs. I specifically looked at these apartment buildings and I'm like, man, whoever owns this is killing it. I'm out here, doing asphalt in the parking lot. And I was like, someday, I'm like counting the windows. I'm like, man, there's like 60 people in here paying rent. Someday I'm gonna own a rental, right? And then, so I just do what I knew, which was work, and eventually got sick of it and said, hey, is there another business venture that I can get into? Is there a way out of this? And as I started to research, just options that kept coming to real estate. It was like, I read this book, I remember it said, for every rental property that you own, you can make $200 a month in profit after all expenses with debt. And I was like, if I can have 20 properties, I can make $4,000 a month in rent or in passive income. I was like, at the time, I was like, eating ramen noodles. I was like, that's pretty much going to cover my lifestyle, right? So then I just kind of went on in. I was like, well, is it going to be, if I try to get 20 single family houses, I was like, that sounds like it's going to take a long time. So why don't I just try this multifamily thing? I could barely spell multifamily. I was like, let's try multifamily. And so literally that's how it started. There's a lot that goes along with that. This whole $200, I'm just gonna tell you right now, this whole $200 per month thing that you hear, if you're fully leveraged, it's bogus. I'm just telling you. Maybe you can do it somewhere else. That's why Brendon doesn't have fully leveraged properties, and he's doing it right. But there's still perks and there's still reasons to do it. But you're not gonna get rich off the $200 a month. You're just not. It's not there. You might think it's there, then something goes out. So there's other ways. We'll get into it, but I still wouldn't change it. It's the best place to be, but it ain't like that. You're not going to pay your bills with that.
Hi, my name is Lisa Lane, and I do small multifamily and residential, buy and hold and flip. And I got into real estate just 3 years ago. I had been in the mental health field and had a mental health agency, got burnt out, locked the doors, moved to Costa Rica, and stayed there for 12 years, teaching English as a second language for $5 an hour. And I had what I thought was enough to retire, and I would have had I not had any problems. But one property that I had there, my first primary residence, I learned a lesson really the hard way. I got attorneys, I went to a title company, I did everything right, but the easement was not on my property. It was on my neighbor's property who got mad at me. And so
It's literally a firefight.
So I spent my retirement fighting this legal battle, so I would have, this was the only access to my home. And so for 2 years while fighting this legal battle, I actually scaled a mountain to and from my house to bring groceries, dog food, anything. And I had really nowhere else to go, or I would have went. And so I spent all the money, and then I met a guy, and he taught me about real estate and the BRRRR method, and I said, wow, that's brilliant. And I said, that's a way I might be able to replenish my retirement. Because if I were to go and come back to the States and work and get a job, it wasn't going to do it. I mean, I might be able to survive, but I sure wasn't going to replace a retirement. So I got to work, and that's what motivated me, was seeing the potential. And what keeps me motivated is the variety of problems, the variety of people, the variety of life. Even though it's simple and boring, it's fun. And I'm passionate about it. And the people at MAREI, if you haven't joined, join. I say MAREI, some people say MAREI. If you haven't joined, join. And another thing, Kim asked me to talk about Express Success, because I've been in Express Success for 3 years. And those Saturday classes that they were talking about up there, sometimes they're $97. And when you join Express Success, you get them for free. And that alone is worth the value. Plus you get coaching from Bina Jones-Cox, online coaching, and you get a library full of educational materials. It's really worth it. Check into it. Check out the classes on the MAREI calendar.
Very good. So keep that. So we're going to roll into kind of like the focus aspect of things. And Lisa, I'm going to start with you ladies first. So there's always something that needs attention. So what do you say no to that helps you stay focused or keeps you from chasing squirrels, is what I call it? And have you ever said yes to something new and then regretted it?
That's a long question.
Sorry.
Okay, what I say no to, really, I can tell you that is nothing out of this world. I say no to digital distractions, and I say no to deal distractions. Digital distractions, everybody knows what I'm talking about, But they say that real estate is a business of relationships. So I have a relationship. I treat my business like a relationship. So I block off time for my business. That's special time. I put my phone on do not disturb or focus. If I were to go out with my husband and my phone's ringing all the time and all these distractions, like it's an Amber Alert or tornado warning or something, that relationship is going to deteriorate. It's the same with my real estate. I have to treat it like a good relationship in order for that to work. And deal distractions. You know, sometimes Brendon was talking about opportunities, and sometimes distractions are disguised as opportunities. Sometimes these distractions are like the hot guy walking by. It's like fun to notice, but not worth what you got going on at home.
Can
right?
you explain your specific buy box? Is that something you could do real quick?
Sure. My buy box is single family homes and 2-3 bedroom, 1 or 2 bath, and I like to value add another bath when we can. And then I have what I call my blueprint, which is my strategies. And I mainly do BRRRR, and I do, my love is short sales. And so that's my new passion. And so just like last week, I was tending to my relationship with short sales, and all of a sudden out of the blue, Sexy Innovation walks by and calls me by my name and says, Lisa. Hey girl. Take a walk on the wild side. The grass is greener over here. So sometimes those new deals, it looks like the grass is greener. And so my short sales, it was a time when I'm like, okay, nothing's happening yet. I could have jumped ship, but it wouldn't have been productive for me to jump ship. I need to stay with what I'm doing, and it will benefit. I will see the benefits of that.
Very good. Perfect. Jeff, this one's for you. So there are more real estate strategies out there now than ever. Like, you can do so many different things. And I know you primarily focus on long-term rentals. Like, that's your whole thing. You had some in Missouri, you have some in Kansas now, so you kind of have all over the board there. How do you avoid the shiny object syndrome and stay focused on what actually works?
Well, I think when people invest in real estate, they forget kind of like Lisa says, it's a business. And you're not going to they have to have a business plan. And you're not going to come up with a business plan from a TikTok reel. You know, my business plan is pretty much the definition of your book. I was trying to figure out for a while why you're having me here and you're going over everything. I'm like, yep, pretty much doing the only thing. But each house you buy, you're essentially planting a seed. And it's not going to bear fruit in the second year, in the third year, whatever it is. But it's one of those deals that you look back 5-10 years down the road, and you're like, that was one of the better things I've ever done. You know, I think a lot of these strategies are based on a couple things. It can be based on scaling too fast. You're trying to build up too fast. And when you do that, there's a couple things you get into that can get you in trouble. You can take on investors. When you start dealing with other people's money, they have expectations for their return. So, and that can force you into deals that you shouldn't be doing. And the other thing that it can lead to is getting over leveraged, which again is going to eat away at your profits. And then in both of those scenarios, you're not going to make it long in the business, in my opinion. It'll end pretty quick. You know, my goal when I got into this was kind of just plant those seeds. Whenever those opportunities come up, plant the seeds. If the numbers don't crunch, I just don't buy it. As nice as I want that shiny thing, as nice as that house looks, if I can't make money on it, what's the point? It's not an asset, it's a liability.
They're going to get the job.
Yeah, 100%.
Let's switch over into like the property management side of things a little bit. I'm going to let Aaron answer this one. So you've always said it's not what you buy. At least you told this to me once. You said it's not about what you buy, but it's how you operate what you buy. First off, why do you say that? And secondly, like, are there any systems that an investor should put in place if they're going to operate rentals or even rentals on your scale?
Well, let me first point out that they didn't give me a focused question. They intentionally.
No, we
skipped
find
the focus
I have it right here. You're not wrong.
because I'm like on the other. Now, I mean, there's an important thing not to miss on that because I learned in the very beginning, each deal is due, like you should be asking yourself this question: how can I make this deal work instead of the short? So anyway, that's my focus thing, which is exactly the opposite of theirs, which I'm going to listen to your guys' input here, but I am like full steam ahead, which I am working on. So the question here, which is about
Like putting
operations.
systems in place. Why do you say you have to
This whole
operate
thing,
well?
let me just tell you, it's true, but commercial multifamily operations suck. I mean, it's just, you have to do it, you have to figure it out, it sucks. And it is, the saying is, you make money when you buy real estate. And so then what my contrary saying is you don't really make the money when you buy it, you make the money when you learn how to operate. So you can take a deal, I firmly believe that you can take a crappy deal and you can make out okay if you have excellent operations. If you buy a great deal and you have terrible operations, you're going to lose money. So the operations is the necessary piece of this. So really in the commercial multifamily world, there's three buckets. There's just three. You're either going to be the operator of the property, you're going to be the person who brings the money or finds the money, or you're going to be the person who finds the deal. All right, so there's three buckets here. So when you talk about systems, I mean, we can get into all the boring systems for property management, and like you mentioned in your slide, you just if you want to do it, you got 20 or less units, just get any software, you'll figure it out. As long as you answer your phone, you're going to figure it out, right? The system that you should be focusing on, in my opinion, is one of those three. Pick who you're going to be, or pick what best suits you, and build a system around that. If you're going to be a deal finder, make a system where you can talk to 100 potential sellers a week or a month or whatever your metrics are, and then follow your own process and system, right? That's the key to the systems, because the operation world, I mean, I kind of got coined as an operator, but really I'm a deal finder. I started off as a deal finder, and operations just naturally came. Literally, I didn't even want to start the management company. I like fighting it. Like, oh, surely the next management company will be better. Let's just ask better interview questions. And I literally just fought it, and it was just a necessary evil now. And so it's beneficial. But your answer is, how do I operate well? Well, honestly, I even partner with good operators still. And I have a management company. Why? Because I don't care about operations. It's just a necessary evil, right? You got to have it taken care of. That bucket has to be full, and it has to be 100% taken care of in this world. So single family is a little different, like I said, but multifamily operations are key.
Yeah, I hear people say, well, I don't want to manage properties, or I suck at it. And it's like, no, you just haven't figured it out yet, right? You can learn it, right? So, all right, Lisa, when did you first determine that you needed to create systems for your business? What was the first thing you implemented, if you can think of it? And have you ever tried to automate anything and then decided that wasn't working?
Okay, I've always had systems. I used to take sticky notes, and sometimes I'd have a whole trail going down the wall and then over this way. And then I got fancy and I started putting them in different piles. And somehow things still kept falling through the cracks. Balls were being dropped. So, a true story, the first time I realized that I needed a better system was when my husband and I would play the who hasn't paid their rent game, because we didn't know. They were we had them depositing the rent directly into our bank account because it was far from us. And so it was short. Who didn't pay? So we called. I paid my rent. You know, when you're asking, did you pay your rent? Well, yeah, I paid my rent.
Of course I did.
Did you ask them for the rent? You shouldn't. You didn't pay the rent.
We
like
had to
this,
find
no.
out, and
You
we
should
didn't
have
know how to
said
find
that.
out who didn't pay their rent. So that was a fun game for a while. And then finally, we got a better system, a property management system. We got billed in, and then we knew who didn't pay their rent. And what was the other?
Oh, well, I'm not going to make fun of you because that happened to me too. I don't care if you have two properties or not. For some reason, it's just hard to keep track of who paid and who didn't. Have you ever tried to automate anything and then decided it wasn't worth it, or what's something they automated that was really good?
Chaos. I automated stuff too soon. when I first got going, I'm like, oh, I need a VA and I need CRM, and so I didn't even know how to manually do these things, and I was automating them. So I should have organized the chaos first, and then gone to automations.
So let's talk about like the types of stuff we invest in, because we all kind of do something different. Everybody kind of has their niche and what they like to do or where they are in their lives and stuff like that. So Jeff, what type of rentals do you prefer? And are there any assets you avoid? And if so, what do you stay away from? Or like you mentioned, there's some things you just don't want to buy or whatever. So what do you like, and then what do you like? Nope, I already know I don't like that.
Well, I'm a single family guy, and primarily it's because it's an asset I'm familiar with. I'm kind of every house I've owned, I've always worked on it myself and done this and that. So sometimes I used to see contractor prices, I'm like, you're insane. But the reason why I've always stuck with single family, there's a lot out there, tons of houses, tons of distressed houses, you just got to find them. Also, when you're buying or selling them, you're generally working with a retail person. You're working with an owner, or the person's going to live in it. You're not working with an institution. The whole thing, the multifamily, especially when you start to get into the A and B class, that always scared the heck out of me, was going against institutional buyers. They've got a whole underwriting team, nailing this thing down that there's no way I can't compete with the cash up front, can't compete with underwriting. I have no idea what to do as far as management goes. So it's usually just the familiarity with it. There's a few properties I've always been able to kind of go to a property and get an idea of what the rehabs would be, especially later on in my investment career. There's one property that I knew I was kind of sticking my neck out there with, had a lot of deferred maintenance. I knew it had some termites somewhere. I didn't know if it was in the whole house or not. I lucked out on that one, and I just did a little bit at a time to get through all that, and put new siding on it last year. It's a beautiful house. It's a gorgeous house now. So it just needs a few things. But like I said, if it doesn't make sense, if the numbers don't crunch at a post-rehab value, again, if it needs all that work and I got to put some CapEx into it, I want to be able to get it at a pretty substantial discount.
Do you have a specific number you're looking for, a specific thing you're looking for in those numbers?
As far as the rehab goes, not really. I had one property that I did buy distressed last year, and it was in a really incredible neighborhood, and I picked it up for about 50% of the value 2 doors down. Now they finished off a room in the basement, but I still came in really far undervalued after doing everything to the property. And when I say everything, I mean like all the way down to the driveway, to every trim piece in the house, every window, siding, roof, the whole thing. So that one I was comfortable with putting a big chunk in, just because I was still 100K lower than the house 2 doors down.
And how are you finding these houses, or how did you find that one?
So that one was just a friend of a friend sort of thing. They're really harder to find these days, especially when you have a lot of the wholesalers that are picking up those properties before rehabbers can even get to them. The wholesalers will kind of take their cut, and sometimes that cut, that's the cushion you want in that property.
Sometimes it's as simple as that. Just tell everybody what you're looking for, that you're looking for properties. It could be a friend of a friend. It could be your kid's soccer coach. It could be somebody knows somebody that's died or passed away, or got divorced that has a property, right?
Yep. So I've had several properties come in like that. I do kick myself because I had one that I bought and I paid cash for it, and I didn't want to leverage. I didn't want to get a loan on the property across the street. That's been flipped twice since I could have bought it. So I should have just done it and taken the loan out. Yeah, I missed it.
All right, Aaron, you're up. So you're the multifamily guy. We already established that, right? So I'm going to ask you, I think this might be a big question for that everybody wants to know here, is do you have an underwriting process that helps you decide quickly if this is a deal? Can you go through that process, or what should people look for if they're looking to get into multifamily? What are you trying to figure out if you're like, this is a deal? Or you said you can make deals, but what's like, yep, that's a no-brainer?
Yeah. So first of all, since commercial multifamily operations suck, there is an endless availability of properties that are poorly ran. So the distress is different than it is in single family. It's there and it's always going to be there. It's constantly going to be coming up. People think, oh, I can go in and manage that, and then they get in like, man, this sucks. And now, well, this is 80% occupied, and then you just have to. I have to be the person that they call, or that the broker calls when they call them. So, but to establish how to evaluate a deal is very important. People will go on and on about this. This is going to be very simple, okay? And please don't ever say cap rate, okay, guys? Like, just a little piece of advice. The people in the multifamily world, it's almost like it's almost like a thing. It's just like, you know, it's like, oh, what'd you buy? What cap did you buy that at? It's like, bro, like, just leave, you know. So let's talk about debt service coverage ratio. Everybody know what DSCR is? We got DSCR lenders all over, right?
Explain it for us real quick.
So if your payment to the bank is $10,000 a month, the bank, let's say your rent that is coming in, a $10,000 a month payment, your rent that's coming in has to be $12,500, right? Or after all expenses, right?
So if they're 1.25.
After all expenses, your net operating income has to be 1.25% or better than the actual debt service. But the point of that is that you can evaluate any deal quickly without getting off into the weeds and trying to calculate it with cap rates just by that. So basically all you need to do is figure out what's the income today. So ask them for a rent roll. And then everybody also says, send me a T12. I do ask for a T12. That's a trailing 12 month expense kind of form. But it doesn't matter because they're going to lie on that. They're going to prepare for the sale. You need to know your own numbers. So what you do is you take, how much rent is it bringing today? Okay, that's off of a rent roll. You ask for that. And then you take that and you just divide it in half by 50%. Because that's what taxes and insurance, operating expenses, trash, all of the grass and lawn care and snow, that's just what it's going to cost. And it's especially going to cost you if you're using a third party 50%. Okay, then you have a number that's left over. If that number does not cover the mortgage payment at the bank based on the new loan amount, then it's not a deal because the bank's not going to lend money on it anyway. So nobody cares about what cap rate or anything is. Does it cover the debt? That's what the bank cares about. So then, how do you do that? If they're asking $2 million for the property, you know there's only two things that you can do in this scenario. You can lower the purchase price if it doesn't cover, right? Or you can put more down payment money down. Well, I'm kind of a debt guy, so let's just get that out there. I don't put more money down because I want to buy more properties, so I'm going to put 25 to 30% as a down payment. So that's my metric. I don't change that. So if after a 25% down payment, the loan balance is going to be X, you take today's interest rates, you run it through an amortization calculator, say my payment's going to be this. You compare that to what your income is after your expenses, and does it cover it by 1.25? If it doesn't, then you got to lower your price. And then I just send a bunch of offers back to people based on my underwriting. Hey, sorry, I love your property. It's fantastic. This is a beautiful property, but the bank's not going to lend on it. Not me. I'd pay whatever you want. The bank's not going to lend. Look at these numbers here. It's not lendable. So then they have a decision, and I say, oh, you're crazy. I can go sell this to somebody else. And, they probably do. But now there are a few little nuances there. Like if you get experience and you put together a credibility packet and you have banks that really know what you're doing and you have a full, like my property management company, I can open the books on everything else and I can show, hey, we're running at this occupancy, we're running at this expense ratio. They'll give me a little credit and say, okay, we can stretch on this DSCR and purchase because we know the value is going to be there in the end. But that's a quick way. It's a debt service coverage ratio calculation, but you got to have your expenses right. Don't ask them for your expenses. They're going to send you expense ratio at 20%. If you're a single family person, you're going to say, oh, that might be right. All right? Multifamily is going to be 50%, unless you just got it real dialed in and might go down to 40.
So what I heard was don't overcomplicate it, right? Divide the rents in half. Take that, make sure it covers 1.25 of your mortgage payment, and that's a great initial, hey, I just did that in 30 seconds, and now I know, hey, this is something I can look at more. I have a very similar formula in my book, you can check it out. Also, another number that drives me nuts, you mentioned cap rates, and it drives you nuts. I hate when people, like real estate is all about interest rates all the time. We talk about it, every meeting you go to, we talk about interest rates, and like, why do I care what the interest rate is if I can buy a property on cash flow and it's going up in value? Right. I don't really care. I mean, I do care, but I don't really care. You know, so it's just another one of those things. Kind of cap rates sound similar to me. So, interesting. Well, thank you. That was awesome. I learned so much right there. Lisa, let's talk about staying simple. You can cover like software or maybe anything about like your entity structure, anything like that. How do you stay organized? You kind of talked about it, like you went from the Post-it notes and you kind of grew from that, okay? What mistakes have taught you to simplify things so that you don't get so complicated that you're missing things or that you're messing things up?
Okay, again, one of the ways is KISS, keep it simple, stupid. I try not to have too many apps. I try not to have too many software programs. I want the minimum to get the job done because that does complicate my life when I have more than one for just one thing. I have one CRM, one property management software. I love what you said about the checklist and routine because I live off routine and checklists. So basically, it's nothing.
Shut up.
Nothing out of this world, just keeping it simple, having one or the minimum amount that I need to do the jobs.
Short and sweet. Jeff, so you can see that one, we're gonna pass that one around. What is something that you used to do but you don't do anymore because it got too complicated? Or how do you grow your portfolio without adding more complexity? I know you said you had quite a few properties, you also manage properties. How do you keep that simple? Because I know you're a busy guy. You don't want a ton of more complexity. Yes, you want to grow your portfolio, but you don't want to make it hard.
So a couple things that I've done through the years is one is just the software aspect on the management side. That was huge. Being able to list properties and have it syndicated over multiple sites, and then able to receive online applications, do credit checks, kind of the whole ACH deposit, everything in one package was huge as far as the management side goes. The other thing was really that allowed us to scale more quickly. You know, when me and my buddy started buying properties together, I mean, we used to do all the rehabs ourselves. So we would go over during the week. I mean, he's an attorney, I was a mortgage lender, we're both working 50, 60 hours a week. So we'd go over, make our checklist during the week, everything we had to do, everything we needed, every tool we needed to do it, load up the pickup and go to Home Depot Friday night, have it packed, ready to go on Saturday morning and head out for 8 hours on a Saturday, 8 hours on a Sunday. So we sacrificed big time. I mean, we put in tile, ran PEX, insulation, ductwork, the whole shebang. So what allowed us to really scale out is, you know, a couple of years after doing that and get to enough properties, we were able to find contractors that were able to do it. You know, and these were rental contractors that they knew what we wanted when we say rent ready. You know, you're not rehabbing the whole thing, the whole place. But those were the two. I mean, that allowed us to really take it up to scale, where a couple of years we got 8 properties a year sort of thing. So.
Follow-up question. A lot of people ask this all the time. How do you find your contractors? How do you vet them? You just use one and see if it goes well. I mean, that's kind of how I worked it, and it's like works out sometimes, it doesn't work out. Do you have any advice on contractors? You only have 1 minute.
I don't even know about that. I pretty much almost fired one this week.
There you go. So what happens even to people that have been doing it a long time?
You know, we had one good guy that was great. Then he went to Mexico, never heard from him again. 100%. One was awesome.
Yeah.
But have another guy who's been really consistent. You know, he's great. You know, he'll make excuses, take his cheese game sometimes, that sort of thing. But I mean, you got to just try people out to figure that part out. If you're looking at someone to get a whole house rent ready, you pretty much want to talk to a management company and figure out who they use.
Okay.
And usually they have some resources to tap into.
I think for me, contractors too, it's like you have to set those expectations. So I think there's some management of the contractor as well, in my opinion. Like if you're just like, hey, go do this, No, you need to be on top of it, at least that first couple times for sure, right?
Yeah, you can't just assume that they're doing the work and not follow up with it. We've made that mistake as well. You got to go over after they say they do certain things and double check everything. It's monotonous, it's a pain, you got to do some driving, but you have to do it.
Yeah. Well, for me, it's the old cliche of if they're doing good work and they're working hard and they're getting stuff done, then get them paid. They like to be paid, right? So.
Yeah, I mean, with the contractor that I'm working with right now and that we've worked with for the last 6-7 years, he likes to work for us because when he's done, I'll just cut him a check. He has other investors that will, delay it 30, 60 days while he's trying to make payroll.
And then they're gonna call you first, or help you first.
Is
Right?
this about the contractors?
You can say whatever you want, Lisa.
Okay, so my first flip, I fired 3 contractors.
Oh.
So I decided that if I found a good contractor, I'd marry him.
Is that true? You must be really good.
I think everybody had the same experience like you, everybody, because contractors.
No matter how long you've been doing it,
yes.
it's a hard thing to navigate. So, Aaron, I got something for you. Are you ready?
Okay.
All right. If you had to rebuild your portfolio from scratch, think back to however long ago that was. I don't know how long ago that was. Would you do when? 2018. Okay, not very long. So you can think that far back. You're not that old. All right. Would you do it the same way, or what would you do differently?
Well, here's the deal. You're either hungry or not hungry. Like, nobody told me what book to read. Nobody told me what podcast to watch. Nobody told me. You can ask for advice, but just like, I'm just gonna tell you, if you're hungry, you're hungry. If somebody would have said, hey, you'll be rich if you start walking right now and you walk from here to New York. Like, I just start walking. Like, it was like, just give me something to do. I'm gonna freaking make it happen. Like, that attitude, you gotta have. You can't go, oh, well, maybe, I don't know, kind of. So, let's assume I had to restart. I'm gonna make it happen no matter what. So let's just make sure that we got that established. And then, the strategy that I'm gonna use is I'm gonna go find the deals, man. There's no substitute for finding deals and taking action. If you find a deal, it does not matter. I can tell you my first deal story. I had no money. All I did was read a book and it said, send some letters. I sent some letters. This old lady calls me and, I go sign a contract off the underwriting out of the book. Tell me what to do. No, nothing. And then, I figured it out, right? And once you have a deal, if it's really a deal, you're gonna find the money. There's so much money. Everybody has money. The problems are deals, operating the deals. Nobody wants to do that. Everybody wants to go golf, tell their buddies about real estate, and be a capital raiser, which is great. We need those, in some scenarios, right? But not everybody can be that. So if you're hungry, you want to get started, or you want to have to restart, go find the deals, drive around, talk to 100 people a week, whatever it is, and then come talk to me and maybe we'll do the deal.
Yeah. Well, I think we would all sit up here and we would say, none of us have all the answers. None of us are experts, but we're workers. We're action takers. And I think that's as simple as that. You can go learn it. You can go do it. Just take action. Right? So, awesome. Lisa, do you have a definition of enough? Some people call it retirement. Some people call it, I'm going to take it easy now. Do you have something for that? Is it based on a number of units for you, or is there something else that says, or maybe it's a goal? What are you looking to get to, or do you have that set?
Well, full disclosure, I'm not there yet with enough. I don't have enough yet. But enough for me is not number of a door count. It's a sweet spot where I have enough passive income to support my obligations and lifestyle and service work without taking control of my time. So if what I'm doing is not passive income and I'm stressed out all the time, can't sleep at night, then that's not worth it to me. So enough for me is where I still have peace, but yet I'm making that profit.
I mean, I'm the same way. One of the other numbers that drives me nuts is when people always ask me, well, how many do you have? I'm like, I don't care. It doesn't matter. Because for me, it's not the number. It's what are they doing for you? Because we're all different, we all have different needs, we all have different goals. For me, it's the equity side of things. I don't care if it's 10 properties, 20 properties, or 5,000 properties. If it's getting the job done and it's building the equity I need, then that's all I need.
Well, I mean, like, not to cut you off, but like,
No,
this
right.
is important to me because you should take the time to carve out your perfect day, okay? You should really think about that, and you should say, what do I want my life to look like? And then you make it happen, okay? So, like, just a summary of my perfect day includes 3 to 4 hours of extreme work. Like, when I mean like extreme work, I'm like 700 phone calls and like 5,000 emails, like, but I try to compartmentalize it to, let's say, 4 hours a day, from 9 to 10 to whatever, 2 o'clock in the afternoon, but then I'm shutting it off and I'm picking my kids up from school at 3 o'clock, right? Taking them to school in the morning, quiet time, like, I got a whole thing crafted out. But my point is that if you don't know what your perfect day, for me, going 1,000 miles an hour is right where I need to be. Now, sometimes it goes too far. I'm not gonna lie. Like, I do need to fix a few things, but I have to have that because that's, I don't know, you know, like, I think that people, they don't craft out their perfect day. They don't know what it looks like. They think they're chasing retirement. They get to retirement and they're like, gosh, golf isn't that cool. Sitting on the beach kind of sucks after 3 weeks. You know, it's like, what am I gonna do? And they freaking sit on the couch, watch TV, and die in 3 years. It's like, dude, figure out what your perfect day is and do it now. For me, it just happens to be go as hard as possible for 4 hours a day, and I kind of like it, right? It's probably one of the most important things is the challenge and all that. So I would encourage you to kind of think about exactly what that looks like. It's weird because it's like, okay, what's a perfect day? Well, some people might say it is actually sitting on the beach, but is that really the perfect day? Like, you know, it's cool. It's a perfect day once a year or once every 6 months, but it's not like what you really want to do. So it really took me a long time to come up with it. So, you know, don't feel bad if you can't figure out what your perfect day is.
Well, I think that's the great thing about real estate. My wife and I talk about this quite a bit, is like, we're not gonna be the retired sit around people. We don't even want to, I mean, she would go to the beach. I don't even like the beach. So for me, it's like this real estate gives you that thing where you can still continue to work, you can still have fun. It can be a hobby almost, but you can also be like, hey, here's my perfect day and I'm there. So that's super awesome. I appreciate that. You had that in there. All right, Jeff. So we're neighbors. So I know your family well. Okay, you got 2 young girls at home, right? I often say that leaving a legacy is more than just money. It can be money, but there's other stuff out there too. What does that mean to you, and how are you trying to leave a legacy for those two ladies?
Oh, I think I got the hardest question.
I know, that's why I gave it to you.
Well, I mean, it's definitely more than money. And that can be proven a couple ways. Something like 75% of wealth is gone by the second generation if you pass on money. I mean, the other thing is, like, if you look at professional athletes, someone that's never managed money in their life. You know, someone can get a $10 million contract, they don't realize 50% of that gone in taxes. They bought their mom a house for $1 million. They're going to afford. They bought another $2 million house. All of a sudden, you can't pay the taxes on it. I think what you really have to focus on is instilling the values and work ethic in the next generation. And I don't think you're doing anyone favors if you just drop a boatload of money on people.
Right.
I mean, sure, that's cool. Hey, guess what? Uncle so-and-so died. I got $100,000 or whatever it is. But if you can't manage $1,000, if you can't manage $10,000, if you can't balance your budget, are you really helping that person out? Probably not.
Yeah.
You know, the best concept I've seen to address this is I've heard it called the family mission statement, where basically if you do have money that you leave to the next generation, you have kind of what your intent with that money is, what your sacrifices were to gain that money. Because, you know, the farther out it goes, the less they realize how hard that was to build, what kind of sacrifices you took. And, you know, that can be like, I want X number of dollars to charity every year, I want to do a scholarship, you know, I want this money to be used to, you know, if you have a kid, you get a bonus, if you want to buy a house, you get some money, you know, just to help them through some of those processes. You know, if someone's in a financially difficult situation, maybe it helps a little there, but again, you run into that same problem. So yeah, I think it really comes down to, being able to push those more than anything to work ethic on the next generation. Otherwise, it might not turn out well.
I'll let you go, Aaron, but how important is an estate plan to you? Or if you were to tell people that, knowing that you have some assets, is that important?
It's very important. I'm still in the process of trying to refine mine. I think it's a constant endeavor. I would trust to have things set up like that, umbrella policies, all that stuff. But I think that's your whole estate planning is just, it can become a lot, especially if you don't want the state to take all of it. You don't want to call up a probate and lose half your life's work. That kind of stuff.
Yeah. Aaron, to jump on that, I know you kind of have a plan for your kids. Do you have?
Here's the deal with my kids.
How many kids do you have again?
So I have 7 kids.
Just wanted to get that out
I
there.
don't even know what they're seriously, like, if I go to the doctor, like, oh, what's your birthday? I'm like, no, I really don't. What I don't know is their ages because they always change. It's like,
That's true.
But, so my kids, they think that, I'm not gonna say it. Here's the deal with the kids. I have to teach them, my job as a father is to teach them how to invest and live off the returns of the money that they invest. So what I do is, my son thinks he wants a new truck. Well, he's been investing in these little house flips that I do. I just make stuff up sometimes, to be honest. He's like, oh, Dad, I got extra $100 from mowing. Can I invest in the house? Absolutely. I put a little note on my iCloud. He gave me $100 on this date, and I'll wait 3 or 4 months and give him 100 back plus 50 or 75 or 100 or whatever I feel like giving back, right? I don't even care. I am teaching him how to invest and see the return.
Right.
And so if he can, so then here's the thought experiment with the truck. He's like, oh, I must buy this truck, it's 20 grand. We did all the math, whatever, this payment is X amount per month. I'm like, okay, how much money do you have to have invested at this rate of return to use your return from your investment to pay your payment on your truck? And then they're thinking, oh my gosh, you're gonna have all this. And I'm like, well, here's the goal, get that. Then you can buy your truck. And then, nobody taught me any of that. My parents were great, my dad, we always had enough, but nobody taught me anything about investing, right? I didn't even know that was possible. I'm like, people are giving me money to use my money? That's freaking crazy. But now I know, and I would have started, right? So now that almost all the kids are investing in, my daughter thinks that, one of my daughters, she's been getting some pretty good returns on these houses. And I gotta break it to her this, she got $1,800 in this house, and I'm like, hey, hold on, let's actually talk about what average rates of return are, because we're getting carried away here. So.
Wouldn't the world be a better place if we taught investing in schools? If we taught what these guys know, I just feel like that'd be so much better, right? So, I only have one more question. I was going to address it to Aaron, but I'm going to address it to you all. But before I do that, I do have one more question, but we're going to have some time here. If you guys have questions that have been rolling around in your head, be thinking about something, and then I'll let you ask the panel up here or address somebody specifically. But I have one more before we do that. Aaron, if you want to go first, that's fine. But any of you, what would you tell the person in this room that has tried and failed? Or what if they're currently stuck on what to do next? Is there something that you can say that would be like that next step? You said take action. And maybe it depends on that person or what they want to do. But if you had a piece of advice, anything? Go ahead.
Well, I'll just throw it out there. We all fail. If you're not failing, you're not trying hard enough. In my opinion, I tell my daughters that all the time. I have one overachieving first child who's just straight A's with everything. I'm like, well, you need to push harder. You need to do something different that get you outside that comfort zone. So, I've had the renters that have trashed houses. I've had renters that had fleas in houses, worse than I can even say. And I've made mistakes on the management side. The key is you just keep it going. You just keep at it. Those are few and far between. It doesn't happen all the time. You learn to vet it out in the process. And again, over time, if you do have a house that you're not quite at the numbers you need to be, I guess what, year 2, 3, it might get there. I mean, real estate is a hedge against inflation. I mean, it gets more valuable, rents go up. It works out.
I kind of said it earlier, but if you are stuck or you don't know what to do, I mean, I feel sorry for you because right now today we have the most amount of educational stuff in AI as you could ever imagine. Imagine trying to do this in the 60s or 70s when you had to go down to a library to get information and then people had to work that. We can get, literally right now, you can get every answer you ever had answered in 5 seconds. So you either want to do it or you don't. I mean, that's really what it is. I mean, people ask me all the time, hey, can you sit down and have coffee with me, tell me how to do this? And the most important thing I can say back to them, and that's why people, this is going to sound rude, but it probably is, but it's like, hey, you got to freaking just go make it happen. Like, pick something, make it happen, take your mentality and focus it toward, I am going to win, right? I am going to make this happen. And then you just jump in, take action, screw up, fail half the time, but then guess what? Then you're experienced. I remember after my first deal, I was a multifamily investor. I would go to these meetings. I was like, literally could say that I was a multifamily investor. And I had no freaking clue what I was doing. You know what I mean? So it's all about action and stuff. So.
Yeah, I agree. It's all about action, and don't worry about being perfect. Nobody's perfect. Imperfect, messy action is what I was told to take. And trust me, sometimes it's pretty messy and it's clumsy, but I do it and I fall forward. Yeah. And if I know you said something about being old, and he said something about being old, and I'm feeling like somebody's talking about me. But you can start over at any age, that's true. I lost my whole retirement, and now I have hope, and it's getting there. It's getting there.
You know, I always say it's, you know, a lot of people say, well, I'll do it when I'm ready. And I always say, that's like getting married or having kids. If you waited until you were ready to get married or waited until you were ready to have kids, we'd have a lot of single childless people in this world, right? You do it and then you figure it out. Right. So the best thing that ever happened to me was we found a property, bought a property within 2 weeks. And I didn't know squat like you. But if we'd have waited until I was ready, then I'd still be sitting here today. So go out and do something today. So, all right, Kyle, you around here with your big fat microphone or no big one around here? Oh, you're out. Just joking. Yeah, we'll take questions now. So Kyle can come around and with his microphone and ask. You can address it to somebody or just ask in general, whatever you want to do.
I didn't quite hear you, Mike. You said...
It's Jeff.
Oh, Jeff.
Yes.
You said that by the second generation, 75% of your money's gone.
I mean, that's the stats that I've heard, and from what I've heard, it's not the small sums of money that we're talking. It's not a house or two. It's the
easy money is going away easy way.
100%. The last thing I want to do with my kids is like just give them a legacy of blowing money and being irresponsible with no work ethic.
Yeah.
Eric's famous saying, at some point, I'm just supporting my great-grandson's drug habit.
One thing I forgot to mention, the whole legacy thing, like if you're looking at actually leaving a legacy, good Lord, don't become the bitter old man or bitter old woman. Like, be charitable, be nice. Like, I know you've seen a lot of stuff, and especially in real estate, you get beat up a lot, but man, you gotta tip your waitress, you gotta tip your waiter, you gotta like show the next generation that you can, give money out, not be stingy, not be Scrooge McDuck sort of thing.
One of the things that Lisa and I have talked about before is when you ask about how much is enough. One of the things that we've always said is when it's enough is when we can do something that we feel like we should do for somebody, and it doesn't hurt us, where it's like if we want to help a person, or she has a really big passion for animals, and like give a certain amount of money to a dog rescue, or set up a clinic for dogs in foreign countries, or something like that. Something that we could just do and not worry about it. Just, so that's when it's enough, is when you can do something like that and it doesn't really, hurt your lifestyle.
I don't know if there's any better feeling than being able to help somebody else, right?
Yeah.
That's crazy.
If you have enough this much, you want more. That's people screw.
My question is for Aaron. What's your buy box?
Whatever makes sense. No. 1970s newer, trying to stick into the B class type of stuff. And, C class asset in a B minus area is probably the actual niche. But you have some new developments going on here now, so getting into that a little bit. So that's exciting. But the buy box is really, is there enough money? So I like to say stuff plainly as possible. Is there enough opportunity in this deal to get all my money back, or a partner that goes in with me in 1 year in the form of a refinance? That sounds audacious, but it's possible. So if I buy this deal and I put $250,000 down for a deposit or a down payment, am I going to raise the value enough that I can get 75% new debt and get my $250,000 back in a year?
So it's
Doug, can we do it? Doug, is it possible?
It's like a bird.
It's a commercial. Exactly. Yeah. I mean, that's a good way to put it.
But some of it's not only the rehab, but it's also the making sure everybody's paying market rents and that part too, right?
Yeah. I mean, I think we have people working. I think Eric and I have people working right now, and we haven't even closed on this deal. We haven't even closed on it for another week, and they got crews out there. So I don't think there's anybody faster in town. But that's the point: is just get the money back fast.
Does that help? Hopefully that helps.
I got a question for you while we come up here. You mentioned AI. What are you using AI for? I mean, I used it tonight to create my About Me slide, and then I asked it to put the QR code in with my contact info. I didn't need another paid program for the contact info. What are you guys using AI for?
I've been playing around with AI a lot, tons of stuff. I pretty much had Claude and ChatGPT open 24/7. I mean, I've played, when it comes to rentals, I was just playing around with it the other day. You can set up what neighborhoods you're looking at houses, and have it analyze the home price, the rent, and the ROI on that. It'll take into account taxes, insurance, kind of the whole thing. And it does it just so quick.
It's about the rental matter. You have to rent matter.
About that. So, does anybody pay for Renometer?
Yeah.
Paying for it?
Do we have any affiliation with Renometer
I
here?
think now
No,
they're
not.
charging.
No.
I'm just telling
I don't think so. Why are you gonna
Don't pay for Renometer anymore, just ChatGPT it. I mean, literally, I'm getting all my rent comps and everything for free now.
I didn't know that. That's good.
Pretty accurate.
That's pretty wild.
I use AI to scrape the data from the county and also from the publications for short sales. And I just copy, paste, and then I have my spreadsheet, and it fills in all the information, so I don't have to go through and manually do it.
It does come out Johnson County too?
Yeah.
Oh.
So my Housecrafts website that I mentioned earlier, housecrafts.com/MAREI, it's entirely built on Codex. All the graphs, all the charts, all the back end, the database, everything built with AI. I put in a link to the Zillow property and said, analyze this property as an investment. Tell me what it will take. Tell me the cost to update this and what I should pay for that property. And it gives me an analysis of all the pictures, the cost. You need to do this, this, and this. You should pay this much for this because the market price is this. It's just everything's out there. All the stuff. I'm scraping as a real estate broker. I'm scraping the Kansas Real Estate Commission and Missouri Real Estate Commission websites for renewal dates and for CD classes because I don't want to have to look up. I only have 19 agents, but I don't want to have to look up every single agent and see if their CD's done. I asked Codex to create it for me, and I have a program on my computer. I click a button, and it goes and looks at every single agent, pulls their CD classes. I mean, whatever you guys want to create, if the program's not out there, it's too expensive. $20 a month on ChatGPT can create just about anything for you.
It's pretty insane.
just verify its work, because it's not always perfect.
True. I'd ask a lot of questions to get to work, but it works. But they answered it. Who else has questions?
Not gonna get this opportunity much.
Hey, Brendon, you said you have 17 properties, right?
Uh-huh.
How do you set up an LLCs for 17 properties?
Yeah, so currently I have kind of buckets. So I do it based on their value. So I have a certain amount of value in each LLC. So values of the property. So I have like 3 to 5 in each LLC. When I was talking about earlier when I said set up a simple entity structure was I have a separate bank account for each LLC. The properties are each run through those LLCs because you don't want to commingle funds or mix your finances or anything if you have an LLC set up. So some people want to set up an LLC for every property. I think that's overkill. I think that's very hard to manage. That's where I think it gets too complicated. Also, I think if you have too many assets in one, for me, that's just, it's about how much risk are you willing to take. And so I have like little buckets where I have about 3 to 5 properties in each one. So is that helpful? Okay.
Aaron, you mentioned possibly having to fire a contractor this week. What are the, for all 3 of you, what is the warning signs for contractors when you're worried about them? Or when you're vetting them? What do you ask?
The truck they drive up in. No.
I mean, the more dense the better, right? What do you guys look for in vendors, and what are some warning signs that you avoid?
You look like you're really eager.
Go ahead.
Well, I mean, I usually look at the folks that I see advertised on TV, honestly, are usually not the ones I work with. A lot of times I snap some pictures of trucks at Home Depot and start talking to people that way. Find a lot of handymen that way. You find I found a yard guy that way. He was just hauling around some lawnmowers like, hey, do yard work. I mean, the issue I had this week was someone, was honestly on the property, $1,200 worth of work, and it didn't fix the problem. And I didn't think it would, and he told me several times that he had 20 years experience that's going to do it. I'm like, well, okay, if you're that confident, let's go. Well, no. But you just got to kind of network a lot. I mean, that's my way of finding people, is just the Home Depot thing. So.
It's about 7:30, just hang outside Home Depot with a coffee.
Pretty much. Just take a picture of those handyman trucks showing up out there.
One other thing is not coming to work. Always delay.
I just wanted to add, a contractor can be good for a certain period of time and then all of a sudden not be good.
Yeah.
So don't get too comfortable and stop checking the work out and that kind of thing, because it can change from one day to the next.
And the prices too, like it might get more expensive, so make sure that they're still giving you a good deal.
There's money involved with this.
Who else has questions? I have another one. I'm a question guy. I love questions.
You don't want
I'll ask you the one over here. What was your first purchase, and what do you wish you knew now about that purchase, or what do you know now about that purchase you wish you would have known when you purchased it?
What's on?
First purchase was a 16-unit apartment building. I sent a letter out, like I mentioned. The lady called me. I had no idea how to really analyze it. I went and met her. She was nice enough to believe in me. I went to the closest bank that there was, which there's only some banks don't do multifamily. So first of all, if you get told no is not real. Like, you can go to multiple different options. But I didn't know that, so I went to the closest bank. I won't say the bank name, but it was like a big bank. And I remember sitting down with the guy, and I was like, okay, here's the deal. I read this book, I could get a 25-year amortization. I read this book that this is a good deal. And I was like, but I have no money. I was like, can I give my concrete company up for collateral for the down payment? And he's like, no, I don't do any of that. He's like, also, no one in the entire world is doing a 25-year amortization on commercial property like this. And I was like, and he's like, also, the deal's not any good. You're like $200,000 too high on your price, like on your purchase price. And I was like, thanks. So I leave there like totally defeated. And I came to, it was like the next night, I still had it under contract. I'm like trying to figure out what I'm going to do. I think I came to this group actually. I met my partner that I still have today, and he was going through a refinance, and he was talking about he just did his first deal and made all this money. And I was like, well, I got this deal, I'll send it over to you, see if you like it, and we can partner up. And he literally hit me right back the next day. I sent it over that night, he hit me back the next day, he's like, I'm in. And I was like, oh, great. So we had an arrangement, I had to have $70,000, he had $100,000, he brought 100. We split it, but he brought more money because I found the deal. That's just how we did the first deal. But so then I'm like, I gotta figure out how to come up with $70,000 to close in like 30 to 45 days, you know? So that's the first deal. What I would have known it. I mean, the only way we got that deal done is because I found him and he said, oh no, we can definitely go to this other bank, they'll do it. And they're like, they love the deal. So the moral of the story is that you gotta go around to the banks that specialize in certain things. And you gotta keep asking and put them together.
I bought a half duplex first, so not a whole building, half a building, okay? Because I found out who they owned the other side. It was a piece of crap other side, and I said, hey, if you ever sell this, come talk to me first. 4 years later, kept asking. 4 years later, we got to buy the other half. I've done that twice. So buy a half duplex, find out who owns the other half, and say, before you sell it, check in on them all the time, and you can do that. And then Shannon's reference to the flood zone is, yeah, I tried to flip a house in a flood zone, and that did not work. So check your flood zone maps before you buy, because it is hard to get rid of when you have one in there. So.
I was just gonna say that I bought my first house in the wintertime, and snow hides a multitude of sins. When the snow melted, there was vines all over the house that when you pulled them off, it pulled part of the house off. And also, it had all these little, they were like little trees, and so you couldn't even walk through the yard without tripping. And liquor bottles, oh my gosh, there was at least 5,000 of those little tiny liquor bottles. And so, you know, I'm picking up those liquor bottles for every day there was more, it seemed like it. Yeah, I ended up tilling the yard and it was crazy, but yeah, that's fun times.
Jeff, you had mentioned that you have a family mission statement. Would you mind sharing what that was or is?
So I actually don't have one, but but it's on your list. It's the best
Let's do it right now.
It's the best concept that I've heard as far as like passing on the wealth to the next generation. But it's like, you know, when we get a little older, we want to have a scholarship fund. Me and my wife went to the same university. We'd love to have a scholarship fund. She's a teacher. I was in the business college, things like that. So, and I think it's important to set those structures with the kids so they know it's not just blow through money, that sort of thing. You know, that's not why you work so hard for it. And that's the part with the values and work ethic that we're trying to raise up our kids. But no, I don't have one yet. My kids are 11 and 9, but yeah, we're going to get one.
You're gonna
It's not like a formalized thing. You don't have to have it notarized.
Now you need to make it.
Although ChatGPT might work one out for you.
Yeah, there you go. That's a good idea.
Just for the panel that Aaron, you mentioned you read a book and went out and took action. I'm assuming you've read additional books since then. So from the panel, if you were going to pick up a book other than Boring Rentals, we're all going to read that one. What one or two books was instrumental in helping you actually figure it out as you went?
How many people have read Rich Dad Poor Dad? 99.9%. So if you haven't read that, probably start with that. I make my kids read Rich Dad Poor Dad, just for the mindset shift, right? And then Multifamily Millions was that book. Multifamily Millions by David Brendon. Was that particular book that I read that told me exactly what to do. But I'm sure they have some book recommendations.
I recently started reading the book that we're going to be doing for the Winvestors Book Club. George, is it Antone? He's got 3 excellent books, and I haven't read them all. I'm only about halfway through 2 of them. But I would highly recommend them for mindset on wealth.
You know, I don't have any books in particular. I'm more of a book on tape guy. I have a hard time sitting still unless I'm on vacation.
Yeah.
I'm not on vacation that much, so I tend to like plug into just tons of stuff and just listen to audio books, honestly. Pretty much every self-improvement book, every wealth book, it's on the list. But I got to be doing something. I can't sit around. So that whole sit around on the beach or retirement thing is not in my part.
I would also mention listen to podcasts, because you can listen to those in your car, you can listen to them while you're mowing, you can listen to them while you're walking your dog, whatever. Always have something in your ear.
Right.
You might as well not be wasting that time. There's a million podcasts out there. Get on Bigger Pockets. They have like 6 different ones, and there's one called Rental Income Podcast. There's Chad Carson's got one that's fantastic. So listen to some of those podcasts as well.
You beat me to my question. I was going to ask if they have any favorite podcasts.
That's almost my book reading these days. But
Me too.
I like Chad Carson's stuff. I like the Bigger Pocket stuff. I've read. There was one. It's probably outdated now. I read one. Mike Butler wrote one on landlording on autopilot. And so it's kind of outdated, but a lot of the techniques are still there. Like, how can you automate this to not make your life miserable managing properties? So
I listen to my podcast on 2.5 speed, so sometimes I talk really, really fast. So you guys, any favorites? Any podcasts you guys listen to on a regular basis?
I mean, my favorite right now is All In podcast. A lot of tech entrepreneurs talk about AI revolution and a lot of upcoming companies, Claude, Anthropic, SpaceX, things like that. So it's a really good one.
Well, the king, in my opinion, of podcasts for multifamily is the Jake Gino podcast, which really played in my. I turned the actual music off for at least 5 years. I mean, it was crazy. Every single time my kids would get in the car, it automatically, if I had this truck, it would just pop up on my phone, automatically start playing from the last podcast or other one. But Jake and Gino podcast for multifamily, Will Marcus, and Michael Blanc. It's like blank. Michael Blanc, probably the best multifamily podcast that you can plug into.
So Aaron mentioned something kind of interesting. He started with a 16-unit apartment. He didn't worry about starting with the small thing. He just said, I'm going to go after what I want. So love that. You mentioned that you came to maybe this meeting and found a partner. What's the importance of coming to meetings like this and networking and those types of things? And any tips for people as they start their business in networking? For anybody?
I mean, like I mentioned, we got 3 buckets in the multifamily world. You are not going to fill all 3 buckets yourself, most likely. I mean, if it's a very small deal, possibly, but for me, I couldn't. So you need to network and push yourself out there, probably, most likely to get into multifamily, or not only to find the deals, but just one of those sectors. But networking it's one of those things that's very, very powerful and effective, but you have to do it kind of like systematically. So I would fly around to these multifamily meetups around the country and in a couple of different mastermind groups for multifamily. And I would come into a room like this and there'd be the networking and you'd talk. And I would just try to strategically only talk for 5 or 10 minutes to someone, and then, I gotta go get a drink, I gotta do something. Hey, give me your card, give me your contact info. Right, and then I would keep a running list of everybody that I met, and then the next day or after the get together, I would reach out to, hey, it's great to meet you. Let's catch up again, right? And it's like a job. It's like you have to work at it. But if you meet everybody through the course of a few months and follow up, well then you're going to end up hooking together on something, or something's going to happen, overlap that's going to affect your business positively. In one way or another. So networking is important, but you got to work at it. You can't just come and really, hey, what's up, and then leave. It's not effective that way, I believe.
I kind of have a contractor verification policy. So like if I meet them at a meetup and they give me their card, it's like, I'm probably not gonna hire you unless I see you again. So like, I want to know you're committed. You're not just coming throwing your card around and you're walking out. So that's one way to network is you find people, but I want to see plumbers, electricians, all those people. I want to meet them a couple times and see them. That's something that I kind of did for myself. Also, like, it's a way to find deals. Like, once you put yourself out there and you're going to these meetings regularly, you're introducing yourself, then when somebody has something, because not every deal works for every person all the time. And so, like, I'm the Johnson County guy. So I get calls all the time. Hey, I got this property here. I got this property here, because they're somewhere else. But they heard Johnson County and they go, well, Brendon does that. Okay, I'll call him. So make yourself known. It's the only way to do it.
I went to Winvestors for like 3 years before Brian Woodbury would be my friend.
He's tough, he's tough.
One caveat though, you said you added value. You said you brought value to the partnership out of the gate. So like having something to add value to a partnership is, you're saying 3 buckets where, like, are you bringing money to the deal? Are you looking for the deals yourself, and can you bring a deal to a partnership, or are you a contractor or whatever? Like find your own value and bring that to people and make sure they have a value add to you as well.
Yep, exactly.
I have 2 questions. Jeff, you mentioned that you put a lot of work in early on rehabbing a lot of your properties. Is there a point where you feel that hiring contractors, aside from saving time and potential tax deduction, is advantageous as opposed to doing the work yourself? And Lisa, did you purchase any additional properties in Costa Rica? And if so, what was your greatest challenge in doing so?
So, I mean, we initially only did the work ourselves because we had to. We hadn't scaled up at that point. When you have 1 or 2 properties, it's hard to invest the money in a contractor. There's not enough cash flow per month to get you there. It's basically the grind work of getting it started. We weren't really worried about the tax advantages of hiring it out. We were worried about cash flow at that point. And we hadn't networked, or we hadn't met all the contractors that we needed to get it done quite yet. So we're still in the early stages of getting the business up and running. So at that point, we were doing everything we could to get it rolling. So you make sacrifices, you put in the work during that time period, and it pays dividends where you don't have to do it later on.
So yeah, I have bought several more properties in Costa Rica since my primary residence, which I'm still dealing with that one. One was, in Costa Rica, the due diligence is different. You have to be more thorough than here. It's not as forgiving. This one property I bought, the guy had built too close to a stream. And so the city came and bulldozed the whole thing, like a week after he bought it. So there's a lot of little things like that you have to know how many meters it's going to be from this, or whether you can cut trees. There's just a whole lot of things. Another one, one other property I bought was Ocean View, and I was going to do a glamping resort there. And I decided that I'm going to sell it. Only because I don't want to be tied to it. It's really good land, flat buildable, great Pacific Ocean views, good price. But if anyone wants more information, but no, I just decided that I didn't want to do the glamping. It might be it's only land. There's not any structures on it. But like I said, it's flat buildable, electric, water. That's another problem in Costa Rica. Is there's lots of really nice properties, but they don't have legal water. And so you can come up on something like that and then can't get water, and then you can't get permits, and a lot of other problems. Yeah, I've learned a lot about investing over there. If you have any questions, I can give answers too.
So why did you decide to buy the Costa Rica? Why did you decide to buy the property in Costa Rica?
For investment. The first one was just to live. The first one was my primary residence, and I made a life over there, and I lived over there for 12 years. And I still have that home, and I go back and forth.
Brendon's family, anything you want to ask him that you can put him on the spot for?
One more question over here. You guys have spare. You love spare.
Yeah, probably.
Aaron, you had mentioned that you, in your first property, or your first deal, that you had to go find $75,000. What would you do to find that money for the part of the deal?
Somebody in my church, I just talked to he's an attorney, he's still a buddy, didn't really know him at the time. I just was like, hey man, listen.
Why'd you approach him?
Yeah, maybe it was just, I don't know, maybe divine intervention. That's what it was, right? So it was like, the right place, right time. But, That's where people say, hey, you're lucky if somebody gave you $7,000. Here's another thing, is I've never had another loan that was unsecured, no collateral, no liens, no nothing on anything. I didn't have anything, right? I've never had another one of those in my life. This was just happened to be the first one. I don't really ask for it, but pretty amazing that looking back that he gave me $70,000. I remember writing him a $412 check for like 3 years. Interest only. I don't even know what that is. Somebody figure what that interest rate is, because that's what the check was. And then it wasn't 3 years, it was like a year and a half because I refinanced it. But anyway, point is that I was just I guess I was just brazen enough to ask. I don't even remember the actual moment I asked, but that's the deal.
About to wrap up here, just a few reminders. If you're a guest, come join us. It's pretty inexpensive. It's $25 a month to get all this knowledge and access to all these people. And next month, don't forget about the trade fair on July 14th. 2 questions for all 3 of you to end with. One is, is there anything that we can help you with? Is there anything you're looking for, a person, a project? What do you guys, what's somebody in the room might have something you might be needing right now? And the second way to end is, what's one thing you want a new investor to know that you wish you knew when you started?
If there's any agents in the room and you don't love short sales like me, bring me your short sale. I'll still pay you full commission. I'll do all the work and I'll bring the buyer. And for new people, just keep coming back.
There's not a whole lot I need at this point, honestly. Pretty self-sufficient. But as far as like something that I want a new investor to learn is, you gotta stick your neck out there a little bit, especially on that first deal to get comfortable. There's people I know that have talked about buying a house for years and years and years and years, and they just don't do it. And if you don't do it, all of a sudden 1 year becomes 5 years, becomes 10 years, and now it's too late. Might not be too late, but you could have built up a lot more. That would be my suggestion.
What do I need? If anybody in here could help me with my grocery bill next month, these kids are out of control.
Or maybe a chef. Do you need a chef? You want a chef on site? What's one thing you would tell a new investor? Give one piece of advice for them.
Take action. You don't have to learn it all. You don't have to know anything. Just take action.
All right.
You'll figure it out.
Brendon, wrap it up.
Take my book home. No. Go home and read a book tonight or tomorrow. Okay, that's your action step. All right. No, I don't have anything more to add than that. So just put your, my mom always says, just take the next right step. So whatever that step is for you, go take it and fail and move forward. So that's it. I'll be in the back if you guys want. Yep. And thank you all for coming tonight.